All right, so in this lesson, we're going to go over the gold price history, or the history of the gold price more recently. We're not going to go over the last thousands and thousands of years, just in the last 60 plus odd years since we went off the gold standard. But saying that, the price of the precious metals just doesn't move, I think, as much as you guys think it does or want it to. And another thing too is I see a lot of quote unquote gurus or specialists, I guess self-acclaimed, with these ridiculous price forecasts, 5,000, 10,000, 25,000. Even this other one gentleman is real popular, says 50,000. That is the purpose for me creating this lesson, is they're trying to predict something that has never, happened. Percentage-wise, it just doesn't move, maybe 15 to 18%. We've had higher and lower years, but saying that, that is the reason for me creating this lesson. So let's go ahead and get into the next slide. So let's go ahead and get into it. What I did is I made a 62-year history of gold. And what I'm trying to show you here is gold really just doesn't move as much as many of these gurus or news outlets or other people lead you to believe. Now it does move, but it just doesn't, statistically speaking, it just doesn't move as much as you kind of think it does. Now, have we had some big moves? I remember when I got my start in the precious metals community, we were in the 300 range, and I worked in the super cycle where it went well over $1,700 an ounce. But saying that, it just doesn't move as much as you think it does. Now, remember in the great bull cycle, in a good year, it would appreciate maybe 30% plus. But in the average year, 15 or 18%. So let's go and take a look here. And that's another important thing is, gold has only been free floating since 1967, 71 when we took ourselves off the gold standard. Before that, interesting, gold was always fixed by the U.S. government. So think about that. The price of gold used to be fixed by the U.S. government, and I do feel like many gold bugs are kind of anarchist or anti-government, but saying that, there is counterparty risk, and that counterparty risk could be the U.S. government. If they come out tomorrow and just hypothetically, and not saying that they will, statistically speaking, very low chance, but say they came out tomorrow and said, we're going to revalue gold to $100 an ounce. There's that risk. So something to think about. Another thing too is the PPT, the Plunge Protection Team. They can come out and manipulate markets as well, and that's a counterparty risk. Or the central banks. If the central banks come out and say, hey, we're now net sellers of precious metals and start depressing the price of gold and silver, that is a counterparty risk. So just be cognizant of that and be careful. There's still inherent risk by purchasing gold and silver. But let's go and get into the price history. So 1955 to 1967 just didn't move that much. All right. It moved, 0.5%. Let's take a look here. 3.55% in 1916. This is when it was relatively rigged. Okay, price just, the government kept it rigged. So you can see in 1968, wow, what a big year, 22.54. So this is when it became free floating. And let's go back at 1969. Let's take a look here. Percentage-wise, -5, -5. Then positive 14% in 1971, and in 72 and 73 and 74, those were some pretty big years. Moved up 43, 66, and 72, but didn't do those huge, 2,000% or even 200% like some of these gurus will make you think. Then again, it came in 1975 at -24.20%, so it went negative that year. And in 1979, that was the biggest year, 120% in the last 62 years, okay? So, and then you can see 29, 32, down 32%. So it really does move. Now, what I did put together here, if you go recent times, and this is interesting, just in the last 10 years, 10-year average, it has only actually moved up about just a little over 9% per year. Moving up, or average has it gone up in the last 10 years. So not as much as you think it does, but let's take a look at the last 10 years. 2016, it went up 8.54%. Excuse me. 2015, negative 11.60%. And then you can see 2013, what a big sell-off, though, dollar-wise. It came down $459.50 per ounce, negative 27.60%. So almost 30% of your wealth was lost if you bought it at the top. So 8.68%. So what I'm also trying to demonstrate here too is, a lot of gold bugs in the gold bug community, oh, gold is money or gold is this, and really it's just another commodity. I mean, I remember crude oil was over 140, dropped down to 26. Lately we've been hovering around the 1300 mark, and silver around the 1650 to 1750 mark, and right now I'm hearing on the phone, oh, it won't go below 16 or 1550, and I go, ooh, be careful. Yes, it can. And it could be not even based on the fundamentals of what's going on, but let's just say, the central banks come out and say, hey, we're net sellers. Boom, they're going to drop the market pretty quick. So those are things to be careful of within the gold sector. It is just pretty much traded as another commodity. The price is derived from the futures markets. If you notice, all the spot dealers follow the spot market due to their hedging programs, and where a lot of them are buying this gold and silver through the futures. So, but saying that, what I'm trying to demonstrate here is, overall, in my opinion, and say the last, 25 or 30 years, gold and silver's probably moved between 15 to 18% per year. On a big year, 30%. On a low year, maybe 5 or 6%. So what I'm also trying to get at is sometimes you have to be very patient with your investment or with your trade or with your purchase, because it just doesn't move as much as you think it does. So again, be careful with those gurus out there putting these really outrageous predictions. Let's say they put a prediction of $5,000 gold or $10,000 gold. Statistically speaking, it's never happened. So it's a low percentage chance of something like that happening. So I wouldn't base my investment decisions off a low percentage chance article. And I'm not going to say name, but there's really, really terrible gold bug websites out there that promote precious metals in such a way that really does hurt the general public and its view of the metal. So in saying that, I really wanted to show you here how, again, the metal just doesn't move as much as it does. And you do have to be relatively pretty patient with what you're doing. So in saying that, if you do have any questions or comments, please feel free to reach out to me, but realize there's still an element of counterparty risk if you're that anti-government or anarchist. I am my own sovereign bank. You still have to be careful because there's still an element of risk. An interesting thing, you never see people saying, the same types of things about corn or natural gas or crude oil, and yet they're no different. They all have their own supply and demand issues, but they're all commodities priced out on the futures markets. So I hope you learned something. Have a great day. Take care.